Okay, we're going to do two sample problems here. We're going to practice with some common adjusting journal entries that usually you see students having the hardest time with. So I'm just cherry picking ones that I think need the most help. And so when we do adjusting entries, hopefully you read a little bit before coming here to do the problem. We had two different types of adjusting entries. You had the deferrals and then you had the accruals. And so the two type that I'm going to do today are actually deferrals. So as a reminder, just a brief reminder, deferrals are when we defer the revenue, either the recognition of revenue or expenses to a date after the cash is received or paid. And so there's two different types, deferred expenses and deferred revenue. And so here in this problem, in these two problems that we're going to do here, we're going to have some deferred, they're going to be deferred expenses. We're going to do office supplies. I'm going to record the expenses now associated with those, and then also depreciation expense. So we're going to do those two here today. So as we're looking at this problem, we have here on November 1st, Archer Spy Services, they had a beginning balance of office supplies account of $600. And then during the month, the company purchased 2,300 of office supplies. And then on November 30th, they had 500 of office supplies left on hand. So first, we're going to just use our T account to make sure we're recording what happened, at least for now. So let's shrink this down. So the first part is saying record in the office supplies T account the beginning balance and the purchase. So that's not too bad. Let's go ahead and do that. What had actually happened. Let's see if I can type in here. That'd probably be better than writing because I write so sloppy. So we have November 1st, and they said the beginning balance was $600. All right, so we'll record our $600. It's a debit, right? Because it's an asset. Office supplies is an asset, so we'll record a debit. And then we had a purchase, so I'm just going to write purchase, but you could probably write purchase and then the date if they gave you the date, but they just told us the purchases for November. And that was 2,300. Oh, let's take away a space. There we go. So we can fit it all in one spot. And so we can see here we have our November 1st and then our purchases. That's all I wanted in that first part. That's fine. Okay. We're going to use this T account anyway to help us figure out our journal entry. I like to use the T accounts first. That is my preferred way. So let's go ahead and record basically what we just did above again. So let's record our November 1st balance, our beginning balance, and let's record our purchases. And then let's talk through what else has occurred, what else they're giving me as information. So they said here on November 30th, they had 500 of office supplies on hand. So they went and counted, hey, what do we have left in office supplies? And they said we have $500 worth of office supplies left. Okay, so that's the ending balance. So let's go ahead and plug it in. We have some easy algebra. We can handle this. And so our balance for November, we can write November 30th for our balance. The book likes to do balance, so let's just stay with what the book does. Let's write balance of $500. So that is the ending balance for this T account. Okay, we are missing. How did we get to $500? Well, they went and counted what they had left and they had only $500 left. So they must have used some. Well, how much did they use? Well, we're going to solve for X. So we can see here office supplies, their normal balance is a debit, right? Because it's an asset. And so if we were to decrease it, it would be a credit, right? We're going to use up some office supplies. Well, let's do some algebra. We have 600 plus 2,300 minus X equals 500, right? Yeah, okay, maybe let write the pen out for you for this part. So we have 600, right, plus our purchases of 2,300, and we're saying minus, we don't know, this is what we used, and we should get 500. All right, so that, let me label it. If you're writing notes, purchase, beginning, this is used, and then this is ending. All right, so solve for X. Well, X is 2,400. All right, we can double check. make yourself an algebra equation. Hopefully you're good there. Right? I'm paranoid and I like to double check my math, right? So then that minus the 2, right? And then we got 500. Okay, cool. That is what I used up. So that is my X. Let's put that in with pen. All right. And so that's what we used up during the time, but we're going to record that as November 30th because that's what they want you to do in the instructions. There you go. So there we go. We solved what we actually used. We're not in balance yet. We need a debit. So we have a credit for office supplies of what we actually used. And now we need to record a debit for actual expense. So we're going to record a debit to a supplies expense. And that's why that makes sense for our deferrals, for our adjustment. We need to record what we actually used for supplies. And so now we have our November 30th again of 2,400. All right, so now we have a debit for supplies expense. Always record your debits first. And then we have a credit because we're decreasing what we actually use, decrease that office supplies so we can get it to that $500 balance because that's what we counted and said we have. So we need to reflect that with a journal entry so we can get office supplies to be this ending balance. And that is our journal entry that we record. We can write a description. Sometimes your book asks for one, sometimes not. So to record office supplies used sounds good to me. There you go. All right, that is all that's being asked. All right, let's move on. Let's do depreciation. So here we have again another deferral, another expense that we're going to need to record to true things up. And so we have here depreciation that we're going to do. So we're going to learn a little bit. We're going to learn the straight line depreciation method, which is really easy. Again, easy math. So we should be okay with this one. And then we'll learn later on more depreciation methods. So this one is Archer Spy Services. They paid cash of $79,200 for spy equipment. Okay. And expected to remain useful for 6 years. And then at the end of 6 years, the value of the equipment or spy equipment is going to be worth nothing. It's going to be worth zero at the end of the year. All right, so sometimes it'll be worth an amount, and we'll see when we do this equation, this little equation for figuring out our straight line depreciation, that we might actually have an amount in there. So that zero value right now, that is called the residual value. So at the end of the life of this particular asset, the spy equipment, it's worth nothing. But sometimes it could be worth something. So that is an important piece of information. So what is the formula for a straight line depreciation? So I'm going to write this out in pen, and so that way you have it. So the formula will be cost, so our actual cost of the equipment minus, and I already called that residual value, that zero value in our case, but sometimes it could have an actual amount. So we want to include that in our equation. So cost minus residual value, and we'll divide that by the useful life. All right, in this case, it's 6 years. All right, and then if you want to convert this to a monthly amount, so they're asking in this particular question here for the month amount, then you would divide this by 12 months to get a monthly amount. Okay, so that, because that useful life is for a year, so then you would divide by 12 months, right, to get a monthly amount. Okay, so let's go ahead and do this. So we have 79,200 minus 0, because our case was 0, and then our useful life was 6 years. All right. So I don't know that number. Maybe the good math whizzes know that number for me, but let's go ahead and do that. Right. So we have 13,200. And we want it for a month. So we'll divide by 12 to get our monthly amount. Let's bring that calculator back up. Get back over here. All right, divide by 12. So we're looking at 1,100 per month for our depreciation. So we're going to go ahead and record depreciation expense for 1,100. All right, so that was our straight line. That was straight line depreciation's formula. They usually write it as SL. All right. So we figured out our amount. That was the toughest part. Let's go ahead and do our journal entry. Again, I like to do T accounts first. So I'm just going to show that way, but your book likes to go in the other order, but that's fine. In this case, we don't need to map it out, but we're going to still map it out anyway. So let's record our T accounts. So the SPY equipment doesn't get affected with our adjusting journal entry. It always stays at historical cost, which is what we paid for. So the SPY equipment will be always listed on, unless we sell some of it or something like that, but it will be always listed for what we originally purchased it for. So we purchased this in March, and it was 79,200. So it's always going to be listed for that amount. So let's go ahead and put in balance. So we remind ourselves that no, we do not do any journal entry, adjusting journal entry actually to the actual equipment. All right. Instead, we're going to use this contra account, which we're going to get to in a second. So here we have depreciation expense. That was what we calculated. That was our expense for the month of March. So we have it. Does it say March 31st? Yeah, it says March 31st. So we have it for March 31st. And it was 1,100. All right. We can record the balance as well for that. Come on. I'll do some spaces so it looks right. All right. Now we have this new account called accumulated depreciation. So I was stressing above earlier that we don't, like how we did with office supplies, we ended up taking it out of office supplies, the amount that was used. Well, in this case for depreciation, we don't touch the actual equipment, the asset there. Instead, we're going to use this contra asset account called accumulated depreciation. So as a reminder, hopefully you read in the book already about it being a contra asset. That's what this account is. And think of opposite, contrasting. So an asset's normal balance is a debit. Well, a contra asset's normal balance will be a credit. So it's the opposite. So its normal balance will be a credit. All right, well, that actually helps us because we do need a credit. Our journal entry right now has a debit of 1,100 that we're going to make our adjusting journal entry for depreciation expense. Now we're going to record a credit for 1,100, and that's March 31st. All right, I'll go ahead and put the balance in for that. So this account, instead of touching the asset of SPY equipment, we are going to always record our depreciation into this accumulated depreciation account. Just as it sounds, it's going to keep accumulating. It's going to keep growing with all the depreciation that we record each month. So if we're doing April 30th journal entry, adjusting journal entry, it will be another 1,100, and so we'll have a balance actually of 2,200. So let me just write that in pen and then I'll erase it. So if we would have had another 1,100, and that would have been April. That's an ugly A, but you got it. And so our balance would have really had been 2,200. So if we were recording for that time, and then we would have had another expense for 1,100, right, for April. But let's erase that. So that account will keep accumulating. All right, let's do our journal entry. I like to do my mapping, and you can see now I have my journal entry on this actual here. So we have depreciation debit 1,100 and an accumulated depreciation credit 1,100. So that's easy for me to record my journal entry. And again, as a reminder, because we're just learning, always record your debits first. I got lazy there and didn't write out the full amount, the full word for equipment. We're okay. And then this is to record depreciation on that SPY equipment. All right, perfect. Let's see. Oh, one more thing they want. Okay, so for this one, they want to know the book value. So as I was saying, we don't mess with the actual asset itself. Instead, we'll have right below it in the balance sheet and the trial balance this account called accumulated depreciation, which will keep accumulating every time we record depreciation. That account will keep growing with its credit balance, and until we get to the end of, in this case, the residual value is 0. We get to the residual value at the end, and then it would be 0 in this case until we get to the depreciate all of it at the end and have a 0 balance. And so if you're going to find out the book value, you would go, okay, well, and it's not computer equipment, it's SPY equipment. Come on. All right. And it was 79,200. This is why I type, because I write too sloppy. And then for the month of March, we had the accumulated depreciation abbreviating, but we're okay, for 1,100. And so my book value, my actual value, what's left, will be that difference, which is 78,100. Cool. So that's your book value. Not too bad. So that is it. That we just did office supplies and we did depreciation expense for the two common deferred ones that usually have trouble for adjusting journal entries.